I want to ask you a question. Has this ever happened to you? So you mark out your whole structure, you determine a daily bias, you do everything just right, and you find a zone that you want to buy from, you place your buy limit right here, and what happens? Price stops you out, reverses, and goes exactly where you wanted it to go. And in today's video, I'm going to explain you exactly why this happens, and trust me, when you find out that only difference is candlestick closure, you will either be happy that you just found it out, or you will be sad that you didn't found it out earlier. So I want you to look at all of these profits on the screen, and trust me, they are all from verified tracker, and I took them all with this exact model. So just before I continue the video, I want to repeat, we always want to wait for the candlesticks to close. Of course, now we are going to go over everything, but I want you to just remember this sentence: always wait for the candlestick to close. Okay, so let's start from the basics. So we need to understand how does the candlestick even form in the market. So this right here is a normal green candlestick that is basically going to the upside. So what do we know from a green candlestick like this? We know where the open is. So this is the open and this is the close. How can we know basically which one is open and which one is closed? So if the candle is green like this, that means that it's going to the upside. That means that it has to open below it closed. So basically it's pretty simple. And what are the wicks? Wicks are basically the highest that this candle has been, like this, and then it rejected to the downside and closed exactly like here. So basically wicks are going to be the highest and lowest point of the candlesticks, and the open is going to be where it opened and the close is going to be exactly where it closed. So fairly simple, but what can we get out of this concept? So we can basically get out that market opened here, we can see how much it volume had to the upside, so all the way till here. We can see if it tried to go to the downside like this, and what can we know? We can basically know how the market basically tried to move the market up and down, so we can know basically where the volume is headed from just this single candlestick. And now almost the same goes for the candle to the downside, except the difference is that open was up here and close was down here. So what can we know from these two candlesticks? We can know that market opened right here and right here, and we can see a nice push to the upside and to the downside, and we can know that in this case right here, buyers were in control of the market, and in this case right here, sellers were in control of the market. And before the candlesticks actually close, we cannot know who is in control, because market can always move this point like down here, and then we can leave a huge wick like this and can just reject the market, and then basically the candle can be green, but then the sellers are in control of the market because buyers are weaker than sellers, and sellers manage to basically reject the market to the downside. So what I'm gonna do today is I'm gonna help you avoid these traps. I'm gonna help you know if the price will continue basically going to the upside or to the downside when we have some kind of sweep in the market. I'm going to go through everything, trust me, just wait till the end, and I'm gonna help you manage a trade basically with the target and where to put a stop loss and everything in this video, so you can make money while others lose money. Okay, so let's right now go through everything you need to know to take your first trade in the market with this strategy. So the first thing that we need to note is in the market there is always going to be some kind of trend. There is either going to be some kind of downtrend or there is going to be some kind of uptrend. So it's going to be like this to the upside. And what can we see in front of us is going to be of course pretty obvious, because we can see the price slowly going to the downside, sorry. But what's going to be more important is that we understand how is the price doing that. So price is not just dumping to the downside like this. Price is doing a specific movement where it's creating lows and highs in the market. You can see right here that market is creating lows and highs, and how are we going to capitalize on that? So I showed you earlier that some traders find their zones, find the buys, but still somehow get stopped out because they don't know about one move that is basically manipulation, and then after that they don't know about the move that requires a nice candlestick close, so we can be 100% sure that the market wants to go our way. Okay, so let me learn you how to basically mark the market structure. So the first thing of all, we are going to basically look for the highs and lows. So we can see right here obvious high in the market, so we can mark it out, let's say with this cube like this, then we are looking for some kind of obvious low after this one. And of course you can see right here we have a nice obvious low, and on this low we can mark out this line like this to the right, so we can look for the next obvious low. After that we have another lower high. Why? Because market is going to the downside and we created a high, so this is going to be lower low, lower high. After that of course another lower low, and then after that we got another lower high. So before we continue, I want to show you one thing that nobody would ever show you. So I'm gonna delete everything and look at it. This is, trust me, this is going to shock you. So this is the first leg we got of this structure. You can see how big it is. It is exactly this big as this cube. Then of course this was one leg, then we had pullback. Now the new leg. If we take this exact quarter and look at how big the next move is, you can see that it's way shorter than this push right here. So that means market is losing some kind of, I would say, fuel. Market is losing momentum and sellers are becoming less and less powerful in the market. But what's even more interesting is after we got this lower low right here and after that we got lower high, what happened? We got another lower low right here. So we can see we broke structure to the downside, but look at how big that move is. Look at this. It is half as big as this first move up here. So market really lost that volume towards the downside. Sellers are less and less in control of the market. So if we mark out the whole structure like this, we are basically looking for another break of structure towards the downside, but market is completely out of power. And how are we going to get this kind of fuel for market to make another push to the downside like this? So what is going to happen? Market is going to fake out and manipulate the buyers into thinking that market is shifting. So what is going to happen? If this high gets swept, market is going to fake out a lot of the people that are waiting for market to make some kind of pushes to the upside like this, because they are waiting for some kind of reversal. And basically after that, after market comes up here, fakes them out, makes them enter into buy position like this, market is going to go and continue the trend. So after we carefully like this mark out the whole market movement and we see that the volume of the market is going slower and slower, what can we do is we can go on the lower time frame like this. Let's say 1 minute in this example. I'm going to show you exactly how we can wait for the reversal of the markets toward the downside. So if we play the market forward, let's make it 3x the speed, 5x. So if we play the market forward, you can see it is going to the upside and there is going to, let's say right here, so you can see that we have a sweep of this high. So beautiful sweep. And what does that mean? That means all of the people that want to enter towards the downside like this just got stopped out. Why? Because the market came up here and basically did a manipulation and swept all of them out of the market. So what is going to be the next step? It is going to be the entry model. So how are we going to enter the market? Based on candle closure. So if I reverse the market right here, we gotta find out one very useful concept that is basically everybody knows about it. If you don't, it's completely fine. I'm gonna explain you right now. So in the market there is something called fair value gap. So this right here is a fair value gap because we have this hole in the market. You can see we made such a huge push to the upside that there was a hole left in the market. Then we have here another fair value gap in the market because there is a, from this candle to this third candle, there is a hole in the market. Then if we remove those fair value gaps, you can see that here we had a fair value gap and then we had another fair value gap literally next to it like this. So this is the last fair value gap. Technically this right here is the last fair value gap of the market right now, but since they are like literally next together, we are going to mark them together. That is just one tip. So we are going to look at them both like this. What we are looking is after the sweep of this high up here like this, we want to see market close below these fair value gaps. And why do I want to see closure below these fair value gaps down here? Because if the market closes down here below these fair value gaps, that means that market actually wants to reverse to the downside, because market is no longer supporting these kind of supports towards the upside, I would say. So they are always trying to push the market higher, but if we disrespect them, close below them, so somewhere around here, if we close down here, we want to see market progress to the downside, of course, towards the next low. So let's see if we get the closure right now. So we still didn't close, and there it is. And why is it so important to get the closure? Because you can see market right here can just come down and go back up and manipulate everybody into entering sells. So what is going to be the next step? The next step is going to be enter the market right here, stop loss above this fair value gap like like this. You can put it on the edge, you can put it on the high. I like to put it somewhere in the middle like this, so I don't get stopped out ever. And look at this, all we need to do is go down here, target this low, and that is basically it. We can just wait and let the market do all the hard work, and look at this beautiful play. So literally 4 risk to reward, which means if you have like a $100,000 funded account, which is like pretty easy to get, it's like I would say few $100 to get a challenge, and if you let's say pass the challenge, you could have made $4,000 in how much is this? This is like 5 minutes literally of the market. So you can see right here, literally 6 minutes you could have made $4,000. And trust me, before 2 years ago I used to work for this for like 3 to 4 months. So this is a huge game changer. So before we go on with another example, I just want to ask you, if you like the video, to leave a like and subscribe and comment something, some questions, whatever. It is completely free. And also at the end of this video, I'm gonna give you guys something very valuable for free, so just stick till the end. So let's get started. So on the chart right now, nothing new. The thing that we just talked about, we have lower low right here, but then after that you can see that we made this higher high. So the trend kind of changed. You can see that we started going to the upside, made a huge push to the upside. Then after that you can see that after this high was made, this is a little confusing part, but I'm gonna explain it 100%. So you can see that we made this high right here. This is the lowest the market has been after that high, but why would I not pick this low, and why would I pick this low to be the lower low, to be the higher low? That is because after this right here, after this low was created, market did not have enough volume to go to the upside to make some kind of new highs, but the market just make a little spike, came back, and then from this low down here we made this whole push all the way up here and basically broke the structure. So I'm going to mark this out as my main low. So this is the higher low. After that we have the higher high, and then after that we can always take a look at that thing that I always guys told you. So we can delete all of this, we can take our cube, and we can see that, look at the amount that market pushed in this leg. So you can see the amount. If we copy it to this leg, you can see that it is almost about the half of the strength. So market will need some fuel to basically continue to going to back to the upside. One more thing, after we created this high right here, you can see that market made a little low down here. It tried to push the market to break above this high, but the market did not have enough volume. So you can see we had 3 in total candlesticks to the upside, and basically market tried to break structure to the upside, but you can see that the market rejected it to the downside. So what is the only logical thing that market is going to do right now? Market is going to go down there, sweep some kind of liquidity like this, and after that we can look for reversals. But I'm going to show you once again how we can basically look for reversals on lower time frame. But before we go on to the lower time frame, you can even see that in this example we are on the 5-minute time frame. So I like to look at structure either on the 5-minute, 15-minute, or the 1-hour time frame. And on the 5-minute, where we can see this clear structure to the upside and market failing to break the structure, and then going to manipulate some kind of sellers into thinking that this is some kind of break of structure. You can see right here, before we swept, I mean, we can also look at it like this. After we swept this on the 5-minute, you can see that we have this nice looking fair value gap. So same things as on the 1-minute time frame, we can wait for the closure of this fair value gap to the upside. So we can wait for the closure above this fair value gap up here. We can enter the market same as we did before. So look at this, market is basically making some noise, and then after that let's wait for the closure. Market closed above, we enter the long position, and we can target something to the upside. So we can target this last high in the market. Let's see, will this even play out? And yes, it will beautifully. Also another 3.18 risk to reward. It is not some 20 risk to reward that all the gurus are selling you out there. It is some realistic return. So the first example entry was on the 1-minute. On this example we can stay on this exact time frame for the entry because it is just so perfect. So because you guys made it till this part of the video, I want to give you something for completely free. It is going to be my strategy playbook, and it is going to be all the little tricks and steps to my strategy in single PDF document. So if you want to claim that, you can go down there to the description and you can just press the link and claim it. So just do that, trust me, it's going to help you in the live markets a ton. And once again, if you like this video, if you found it helpful, you can leave a like and subscribe. That means a lot, because then I know that I'm doing something right and that people want to see more of this content. so that will be really nice for you to do. Also, one more thing, if you want to skip all the hard learning by yourself and want to get mentored by me and work with me personally one-on-one, there is still spots in the mentorship. So if you want to do that, you can click the link down there to see if you're a right fit for the mentorship. And with all of that being said, I'm gonna see you guys in the next video. Peace.